Okay, lots of people coming in. Right, welcome everybody. Thanks for attending another Insights with Rich and Mike. Rich is the one with glasses. I'll take my glass off your seat. I'm Mike. Okay. Delighted to say that we're joined by Maxine Bligh today. Hi, Maxine.
Hi, everyone.
Now, Maxine's got a fantastic title of the Chief Membership and Innovation Officer of the REC, the Recruitment Employment Confederation. So, Maxine, quick intro. What does that grandiose title mean in effect?
Yeah, thanks, Mike, and hi, everyone. It's great to be here. Looking forward to the discussion. So I have been at the REC about 7 months as Chief Membership and Innovation Officer. So my teams cover our services, our products, overall our offer to the membership, and then our account management and sales. And the innovation bit is written in with the idea of making sure that we're continually kind of looking at that and future-proofing it and thinking about what the industry needs for the future, as well as what we're doing at the moment. And I joined the REC from the CBI, so the cross-industry business lobby, where I was for more than a decade in various roles. And I think some kind of useful context for today probably from that is that I don't think I ever had a meeting there in all my time. Every single one of our members, regardless of industry, sector, size, every single one would bring up access to people and skills as kind of their key challenge and the thing that they needed to get right for their future growth prospects. So that's what attracted me to the REC role, and I think why the industry does have such an important role to play in the future of the economy.
Fantastic.
Great. Yeah, Maxine, hello. Yes, thanks again for joining us. And yeah, I mean, that sounds like your experience there at the CBI coming into the REC is yes, stood you in good stead. You've got some great knowledge behind you, and hopefully we can impart a bit of that to the people on this call today. We were just saying before we started, Mike and I, we were together on a sales day at Giant Finance to plan for the year ahead. January seems like the time that people do that, a good time to look ahead. So I guess we'll kick off with that question. You know, from your perspective at REC, and what do the next sort of 3, 6, 12 months look like in the world of recruitment?
Yeah, thanks, Rich. So I thought I would break that down a bit, just thinking about where we are now, where the market's going, in our view, what that means for the industry, and then what that means for us as an industry body. But feel free to sort of jump in with any questions as I go through. I think I've got about 10 minutes as an opener. So in terms of where we are now, looking at the economy and the market, at the headline level, high inflation obviously dominated last year and low to no growth. And on the client side, I think that translated into weaker investment, more uncertainty about hiring and slower decision making. But also a really direct impact on our industry. So when you're paying out the workforce before your client pays you, if you're borrowing on that at 2%, fine. You know, at 8%, much less fine. You know, you're subsidising the businesses of others effectively. So good news that we're seeing that come down to around about the 4% mark at the moment. But for most of last year, I think what our members were telling us is the market was tough. It was hard, but it wasn't bad. But I think when we look at the data, you know, it did weaken over 2023, especially for permanent roles. But it did so from a really high base. It's important to remember, I think, that activity levels overall remain relatively high by comparison to sort of that pre-pandemic norm.
Almost a reversion to the norm, isn't it? Yeah, after 2020 and everything that came following that. Yeah.
Yeah, it's that, you know, unemployment is still low. There remains opportunity out there for job seekers, sorry, especially in kind of growing sectors. And for us, just to, I guess, tell you a little bit more about the data we're seeing, it is borne out in the activity. So even though it slowed in the last couple of months, jobs postings in December are about 656,000, 1.7 million active postings. And while that is a bit of a drop off, it is still higher, as we said, than pre-pandemic. So yeah, not the sugar rush, but not bad. And I think for us, that's creating this feeling that the jobs market is almost in a bit of a standoff with the wider economy. So we think the underlying demand is there, but both employers and candidates sort of waiting to see how that develops before committing to new roles. Yeah. So it's a little bit cat and mouse, which I think is why we're seeing perm demand down. But that's strong evidence that firms still do want to hire, translating as more temp roles. So they're taking a bit more of a cautious approach.
Yeah.
And I would say sitting under that, varied sector stories. So retail and construction have been weaker, logistics, healthcare and hospitality stronger. It'd be interesting to sort of, see if that tallies with what you're hearing from your clients as well. I think one thing I did want to pick up is that, again, probably kind of related to the economic context, client demands, I think, are changing and becoming more demanding. So, we're hearing from our members that actually decisions are being left to procurement rather than HR more often, really squeezing on price. And actually companies starting to sort of fall behind in terms of good prompt payment practices. And I think it's important for us as an industry that we're taking a united approach on that. So sticking to our guns on pricing that's sustainable and recognising that, this is a professional service, not writing bad business.
Yeah. I think, like you said, sorry to interrupt there, Maxine. I think it is very much sector specific, as you said, and certain sectors are better than others for that and prompt payments. And the word you used there is sort of, it's a professional service based industry, and that's what people need to be aware of. But we're seeing a huge number of businesses at risk of bankruptcy, effectively, just because of the economic uncertainty out there. So no, it's more important than ever to make sure you've got those good processes in place, and that your supply chain is robust, I guess. And there's businesses like yourself, like us, Giant Finance, who can assist with that. But yeah, it's more important than ever, I think, just to make sure you've got those processes nailed, isn't it?
Yeah, I think that's absolutely right, and that you're on top of it.
Yeah, absolutely.
Should we look forward? If that's the sort of picture now, should we look forward?
Absolutely, yeah. Let's look ahead and see how things are looking. If it's looking rosier ahead.
Yeah, so again, at that kind of more headline economy level, the expectation is obviously that inflation continues to drop and drops down to 2% by the middle of the year. I think GDP is expected to remain relatively flat. I looked at the CBI forecast before I came on. I think that's 0.8% growth in the year. However, I guess the take on it is that growth is needing to be kept relatively flat while inflation is brought down. But actually, ahead of an election, the Chancellor needs a good summer, so he needs to think of things that will fire that up a bit.
Yeah.
So it'll be interesting to see what he can do there in the spring. Spring.
I'm sure we'll get all the usual headlines of tax cuts incoming, and whether they materialise or not, we shall see. But you're right, they do need a good year, and that general election on the horizon in November, December, whenever it's going to be, is going to be obviously a big economic event for the country. And we're seeing sort of flat wage growth at the minute after a couple of years of strong growth. So it comes back to that point that you made earlier about that cat and mouse thing with employers and employees, and who's going to make that jump first. And I think things will move. It's just a matter of when.
Yeah, I think that's right. I think what we're seeing in terms of sentiment in our jobs outlook is that while firms at a macro level are quite gloomy about the economy and do expect it to get worse, they're actually quite positive and confident in their own businesses. So their intentions around their own hiring and investment are positive in our stats, which is good news. And we think in that context, perm is probably pretty close to the bottom of the market, and that there are good forward signals for the second half of the year, particularly with London as a market doing better. And I think sort of to your point around pay, as growth returns, we know that businesses will want to be quick to hire, and that actually lack of labour supply remains a pretty key issue in that regard. Like the market shouldn't really be as tight as it is after the couple of years that we've had for the economy. So I guess the sort of flip side risk of that over the medium to long term is that pay inflation comes back.
Which I guess is what the government's trying to avoid where possible because of the knock-on effects. But yeah, when it's a candidate-driven market, it's almost inevitable, isn't it? Especially on that perm side. We're certainly seeing a pickup in the market, even in the last sort of 6 to 8 weeks. Mike, I mean, we're certainly seeing a lot more inbound leads and a lot more inquiries about invoice finance, and people looking to perhaps diversify away from temp into the perm sector, which from our side is always a sort of strong indication of where the market's at.
And actually, vice versa. A lot of people saying, right, okay, the perm's a bit quiet, so let's build a temp desk as well. And hopefully it'll go from temp to perm as they take them on board as the economy lifts at the end of the year. So, yeah, fleet of foot, I think, is the nature of the game for this year to keep your turnover going, isn't it, Maxine?
Yeah, I absolutely, that's right. Yeah, and when you look, I think at sort of the shape of our labour market now, there are kind of we have fewer people. There's been that drop off. Kind of, we know that lots of people didn't come back to work kind of post pandemic, retired a bit earlier, the Brexit effect, etc. It's going to be a tight decade. So there's what's going to happen this year, but also that longer term look ahead as well. And as you say, firms looking at how can we be more agile, where are we going to be better placed in different markets?
Yeah. I think that's a whole other webinar. The next decade, how things are looking in the next decade. But no, you're right. It's all connected, and we obviously focus on. We focus on sort of SME size businesses at Giant Finance, and that sort of size recruitment business. I think coming back to my point earlier on, it's key for them to have that sort of those robust processes in place and a good network of support and companies like the REC, and there's other industry bodies out there that can provide those services. How are you seeing things in terms of your membership numbers at the minute? Are you seeing a sort of an upswing there?
Yeah, we are. Our membership, so retention on last year is good so far. Which is great, and good interest in the year ahead. I don't think we're not seeing as many startups at the moment, which does perhaps suggest that actually people firms are holding on to their people, and actually they're not as many sort of quite needing or willing to take that risk.
Well, when you're sort of if you put yourself in that recruiter's shoes and you're thinking, well, I've got plans in the next 6 to 12 months to set up a business, and then you look at the economic outlook and you think, well, I've got a good job, I've got a good salary, I've got commission coming down the line. I might just sit tight for another 6 months and see how things look in the summer or in 2025. Nearly said 2024 then. Just about got my ears right. So there's all these things to consider, and I think it's interesting to hear you say that the startups sort of memberships are flat, because eventually it will all start to flow through, but we certainly get a lot of inquiries, and we're always available to offer finance facilities to startups, because they're the sort of the clients of the next sort of 2, 3, 5 years that we want to be helping to support and grow.
Yeah, absolutely. And I think we would expect some change in sort of the market and how recruitment is positioning itself as a service, I guess. It's interesting. You mentioned the election this year as well, and when we look at, I suppose, that labour market tightness, some of that is going to some of the outcome of that is within kind of policies of a new government, and I guess for us, we're very aware that the likeliest outcome is a Labour government that maybe doesn't share our own view on temporary work and why it's important. So for us, getting that message across this year on why it's needed, why people like to work in that more flexible way, is really important. So that's a sort of us doing that, but actually the industry being able to articulate that as well, I think is going to be really important this year.
Yeah, absolutely. Okay, look, that's been a fantastic insight into the way that things are looking from your perspective, Maxine, and like we'd obviously recommend anybody to the REC. We work closely with you guys, so if there's anyone out there that's looking for more information, I'm sure you're available to chat and talk about what you can offer. So please do get in touch. Likewise, myself and Mike are always available to chat around any of the issues that we've discussed today. And invoice finance and back office support, that's our bread and butter. That's our day job, right, Mike? So we're always around to chat about that sort of thing. So on that, we'll keep it short and sweet. But Maxine, thanks very much for your time. That's been fantastic.
Yeah, absolutely. Thank you, Maxine.
Yeah, and thank you. We'll be sending out details of the next webinar in the coming weeks. But thanks everyone for joining, and I hope to see you all again soon.
Thanks, Dan.
Thanks, everyone.